Hi, dear students. Today we are discussing a topic, capitalization. Capitalization is the process of determining the quantum of fund that a firm would require to run its business. That is, it involves the process of determining the total quantity of capital required by a business. It is the process of determining total capital requirements. Then capitalization, we have heard there are three types of capitalization: overcapitalization, undercapitalization, and fair capitalization. Okay, there are two theories related to capitalization, and the first theory is earnings theory. This theory is discuss how we will calculate the total amount of capital required. Okay, the first theory says that amount of capital is calculated based on current return on investment and expected rate of return on capital. For example, if we are currently making a profit of 2 lakhs and our expected rate of return is 10%, then capital can be calculated as 2 lakhs expected return, current return, divided by 0.10 expected rate of return. So 2 lakhs divided by 0.10 is equal to 20 lakhs. Okay, this is how capital is calculated as per earnings theory. Then the equation is capital is equal to profit, current profit divided by expected rate into 100. The second theory is cost theory. Total amount of capitalization is determined by adding two items, that is by adding cost of fixed assets and requirements for working capital. That is, total capital is estimated by adding both fixed capital and working capital, or amount of capital required for purchasing fixed assets and purchasing current assets. Okay, then the first term we will discuss is overcapitalization. Overcapitalization is not the abundance of capital, but if the earnings of a company are not large enough to give a fair return on the amount of capital invested by the business, it is called overcapitalization. Once more, if the earnings are not large enough to give a fair return, ഇൻവെസ്റ്റ് ചെയ്ത ഫണ്ടിന് മാത്രം പ്രോഫിറ്റ് ഇല്ലാത്ത സാഹചര്യത്തെയാണ് നമ്മൾ സിംപ്ലി ഓവർ ക്യാപിറ്റലൈസേഷൻ എന്ന് പറയുന്നത്. ഓക്കെ, ദർ ആർ സർട്ടൈൻ പാരാമീറ്റേഴ്സ്. ഫസ്റ്റ് ക്രൈറ്റീരിയ ഈസ് ദാറ്റ് ഇഫ് പാർ വാല്യൂ ഈസ് ഗ്രേറ്റർ ദാൻ മാർക്കറ്റ് വാല്യൂ. പാർ വാല്യൂ ഈസ് ദ ഫേസ് വാല്യൂ. If the face value of a share is greater than market value of share, then we will say the company is overcapitalized. And the second parameter is that if book value is greater than real value, we will examine these values. First one is par value. Par value is the face value. Second one is market value. It is the value in the stock market. Then book value. Book value is the value as per our balance sheet. That is share capital plus reserves and surplus. We will term it as net worth, equity, shareholders fund, etc. Okay, share capital plus reserves and surplus divided by number of shares. Then we will get a book value of one share. Real value is the capitalized value of profit divided by number of shares. We will capitalize the value of profit, then it is divided by number of shares. Capitalized value is equal to average annual profit divided by rate of return, cost of capital, or KO, overall cost of capital, or NRR, etc. Okay, then there is an example. State whether the company is overcapitalized. Share capital 5,000, shares of 10 each 50,000, reserves and surplus 25,000, current liabilities 15,000, fixed assets 90,000, market value of a share is between 8 and 10, average annual earnings is 6,000, NRR 10%. How we will calculate? The first case is we will find different values. Firstly, par value. Par value here is the face value, that is rupees 10. Second is market value. Market value is the value in the market. Here market value of share is between 8 and 10. So we will take the average value, that is 9. Then book value. Book value is equal to share capital plus reserves and surplus divided by number of shares. 50 plus 25 divided by 5 is equal to 15. Then real value. Firstly, we will capitalize the profit. That is 6,000 divided by 0.12. Or 6,000 divided by 12 into 100 is equal to 50,000. Then divided by number of shares 5,000 is equal to 10. So here par value is greater than market value. That is 10 is greater than 9. Book value is greater than real value. 15 is greater than 10. So we will say that the company is overcapitalized. There are different reasons for capitalization. Next we are discussing causes of capitalization, overcapitalization. First one is promotion during inflation. During inflation period, all the prices will be higher. Cost of starting or promotion expense will be higher. So we will be spending a lot of amount more than that is required. So it may lead to overcapitalization. So promotion during inflation. Second, high promotion expenses. If the promotion expenses are very high, it will lead to erosion of our capital. Our capital will be utilized for the unnecessary purpose. It may lead to loss to the company. Then overestimating earnings. If we are overestimating earnings, we will bring more capital, but the earnings will be lesser. So if capital is more as compared to our earnings, it is overcapitalization. Application of high capitalization rate. We know there is capitalized value of profit, that is average profit divided by capitalization rate. If we are applying high capitalization rate, our real value will be lesser. If this is lesser, that is another reason for overcapitalization. The next, inflated assets. Purchase of inflated assets. That means purchasing assets at a very high price. It will lead to loss to the company. Then shortage of capital. If a company has not sufficient amount of capital, it cannot utilize all the profitable avenues. So it may lead to it may lead to insufficient amount of profit. You notice that shortage of capital is one of the reason for overcapitalization. That is an important point here. Okay. Next, defective depreciation policy. If a company does not provide adequate depreciation, that is the amount of depreciation provided is lesser, the book value of the company may be greater, because we are taking book value based on balance sheet values. Then liberal dividend policy. If a company is making all the amounts as dividend, liberally it is paying dividend, it will not be able to utilize the reserves and surplus, so it may lead to shortage of profit as compared to capital. Then high fiscal policy, tax rate. If the tax rate is very high, the company will not be able to make payment of adequate dividend, so it may result in lesser market value to the share. Then next, one term related to overcapitalization is watered stock. Watered stock means stock means shares. Stock not represented by assets of the company. That means the stock does not correctly represent, the stock value does not correctly represent the assets of the company. It may happen at a promotion stage. If at the promotion stage the company is spending more amount for promotion expenses, etc., especially at the time of inflationary conditions, then it may lead to utilization of capital unnecessarily. This is just like overcapitalization, but it is not overcapitalization. So the overcapitalization at the promotion stage is called watered capital. In this case, the company need not be overcapitalized, because even if there is watered stock, later period the company may recoup and it will be able to make more profit. So all the watered stock need not lead to overcapitalization. Then there are another term. If the earnings are not large enough, we will call it as overcapitalization. And undercapitalization means if the earnings are large, very high as compared to amount of invested, that is, it is just opposite to overcapitalization. Okay. Then another term is fair capitalization, that means if the earnings justify the amount of investment. Okay, then we will discuss the causes of undercapitalization. It is simply just opposite. There is no need to clarify these items, but we are going through that. Just especially undercapitalization is just opposite to overcapitalization. That is, if market value greater than book value, if real value greater than if market value greater than par value, and if real value greater than book value, we will call it as undercapitalization. And the causes are also just opposite: promotion during deflation, low promotion expenses, underestimating earnings, application of low capitalization rate, deflated assets, high depreciation policy and low dividend policy, low fiscal rate, tax rate, etc. Okay, these are the areas related to capitalization. Okay, thank you very much.